Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 3rd of February, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. We're going to go for our usual Monday run through, which is a little different to our usual daily run through. Mondays, we're taking a look at what I like to call the shape of the week to give us an indication of what we've got coming up in the week. Why do we do this at trade day when we're day trading? Well, if we've got some potentially more volatile points maybe later on in the week, then it's potentially going to be a little bit calmer start to the week at the beginning of the week, and vice versa. However, obviously, we've got some over weekend events in here with the tariffs being put on by Trump, which have significantly impacted markets, which is mean we've got volatility today no matter what. So, but we'll run through what we saw last week, what we've got coming up this week, on the macro side, macroeconomic data side, on the central bank side, on the earnings side. Then we'll also take a quick look at the charts as well. So last week was all about, the initial part of last week was Monday's plan. So we've got these, just to quickly go through, we've got the macro matters in here. And if I just quickly open in here, just to show you where these are. So I'm just going to quickly mute myself when this pops up because it will be streaming. I'm just going to pause that. So so in here we have below where you're watching me live in here now. If I go down here, we've got these three columns in here. On the right hand side, Live Squawk Daily Briefing. This is our daily news updates from our partners at Live Squawk. In the left hand section here, the technical analysis levels, we get these updated every day from Market Chartist. That's me. So Market Chartist daily levels and analysis, technical analysis on indexes, commodities. So you look at the bond markets, look at the here's looking at the bond markets, 2 years, 5 years, 10 years, 30 years. And then here we're looking at the S&P, the NASDAQ, gold and oil. So we have those. And then every weekend we publish these reports in here. So we get the macro matters, which is the more in-depth look, and the macro summary. So these come out of the weekend, which we're going to take a look at now. So here's the macro matters, the longer version, and then ends up with the table, which we also have on the macro summary. So I'll go use the macro summary as my base in here. So to go through. So last week we had stocks were down in the US, but significantly up in Europe. So we're going to see a little bit more of this going on, I think, this year. This was definitely a hallmark of what happened with Trump. We saw a definite bigger differentiation between US and non-US stock indices, and we saw that last month in here with the stock 600 in here. That's the pan-European stock index in here, up 6% for January, doing better than the S&P. And last week, European stocks went to new all-time highs. Stock 600, the FTSE, the German DAX, ECB cut interest rates last week, so that boosted optimism as well. Where we saw the Fed obviously didn't cut rates. It looks like they're not going to be cutting rates anytime soon. And then these US stocks got significantly hit at the beginning of the week, as we know from Monday's tech-driven sell-off, driven by the emergence of Chinese AI startup DeepSeek. Sharp sell-off in stocks, in AI stocks, in tech stocks. NVIDIA, which has led the way higher for the major stock indices in the US, dropped 17% on Monday alone. And so, all of that saw a more negative tone. So we've had a couple of really strong up weeks already so far, previously in January. And then we saw a significant sell-off last week. Markets did rebound through the week, but not to the point of recouping all of their gains. And obviously, we'll come to it shortly, but significantly lower again in here this morning. So last week was a bit of a roller coaster for US stocks, European stocks doing well, making new all-time highs. And the driver for those losses was really initially the DeepSeek driven sell-off to US AI and the tech sector overall. The Federal Reserve in the middle of the week kept rates unchanged, but also indicated they're in no rush to cut rates anytime soon. That's reflected in the markets. We'll come and look at the CME FedWatch tool shortly. We also got Apple, Microsoft, Meta, and Tesla last week. And although Tesla missed, it was up. Apple, Microsoft, and Meta kind of mixed results across those, but they were still sort of languishing still from the sell-off that we saw because of DeepSeek earlier in the week. So mixed results from Apple, Microsoft, Meta, and Tesla. And even though they were positive in places, still kind of mixed endings to the weeks for those major stocks, four of the Magnificent Seven there stocks. And then next week, or that's going to be this week in here, we're looking at Alphabet and Amazon upcoming. And then we also get the US jobs report on Friday, and we'll take a little bit more in depth look at the data that we've got coming up. So there is a Bank of England meeting, interest rate decision on Thursday, watching out for that as well. I think we're expecting no change on that. I'm pretty sure we're expecting no change on that, but we'll look at that as we come to it on Thursday. And so the big report really is the US jobs report on Friday we have coming up. But today we do get global manufacturing PMI data Wednesday, the service sector PMI data. You also get US factory orders on Tuesday in between. Nothing really major out of the US on Thursday, and then say that US jobs report on Friday. And then it's Alphabet, aka Google, on Tuesday, and Amazon on Thursday. You also get Walt Disney, that can often move markets as well. So Walt Disney on Wednesday. So Alphabet Tuesday, Walt Disney Wednesday, and Amazon on Thursday, up and coming. And here we'll look and see what we've had so far today. So we've had, you see a mixed bag on European but mostly better than expected in the European PMI data so far. So the Swiss and French manufacturing numbers slightly missing. The German, European, and UK data slightly beating expectations in here. And the Eurozone CPI, although this is in green, that's green for positive, up for the currency. That's actually inflationary. So that's not a good number in here for the pan-European, the Eurozone as a whole CPI data. So they're ticking up more than expected in here. So that's kind of a negative, really. Looking ahead to today, and what you guys are looking at, probably the US equity indices. With most of you trading US equity indices, we get the manufacturing PMI data from S&P Global. Remember, that's not as important as the ISM number. So at 9:45, the global manufacturing PMI number from S&P Global. So the US manufacturing PMI number from S&P Global. And then we get the ISM number, the more important number, 15 minutes later at 10 o'clock Eastern. So we're watching out for those. 12:30 Eastern as well, Bostic speaking on the wire. So watching out for that. Let's go take a look at the earnings calendar. So we've already kind of covered this really, but Google, after the bell on Tuesday, nothing really significant in here, nothing really big in here today. Moving through Wednesday, Walt Disney before the bell, so for Walt Disney, and then after the bell on Thursday, we get Amazon. Let me just refresh this because I didn't get the Good Morning to America wasn't up. Okay, so the big sort of news in here over the weekend were the tariffs put on by Trump. We didn't cover that there in the Macro Matters. The Macro Matters was already written by the time with this had come out. So, but Donald Trump putting tariffs on here, unleashed market chaos. So Donald Trump's global market sell-off. So stocks significantly down in here this morning, between 1% and 2% globally, up more than 2% in some places, making good his threat to impose tariffs on Canada, Mexico, and China. Levies are set to take effect tomorrow, barring a last-minute deal. So that's going to be it, a last-minute deal in Trump's calls for leaves of Canada and Mexico today. More to come. The European is next on his tariff list, he's saying, and the EU has vowed to respond firmly. So not good in here. The levies on Canada and Mexico are set to squeeze American consumers. Trump even mentioned that, potentially higher prices, maybe adding to inflationary pressures in here. Goldman Sachs warning US stocks may drop 5% in the near term, where they're already down in places 2% or more this morning. So not good in here, but we'll take a look at the technicals at the moment. Not too bad, though, the intraday price action. It's going to be interesting to see if we do get a rebound in here, because we've already had a rebound in here so far today. But a lot of articles obviously covering this in here today. Dollar is up and stocks futures sink 1% on tariffs. So the dollar's up. Why is the dollar up? Well, it means that the chances are that the Fed won't be in any position to be cutting rates if there's inflationary pressures that come through. So rates staying higher, so it makes the dollar more attractive in here overall. And potentially these tariffs are going to be more, even though they could potentially harm the US, they're potentially more harmful to non-US. Okay, so the rest of the world. So hence their currency is selling off and the dollar and rallying as a safe haven. Markets unnerved by tariff man. Trump's tariffs trigger stock slump. Dollar rises on trade war fears. Dollar surges on Trump tariffs, sending peers, so that peers being other currencies, to multi-year lows. Oil prices up as well after US tariffs, but supply disruption fears. So some of the tariffs on Canadian oil, US to tax Canadian oil at 10% in here. So Mexican energy imports to US face a 25% charge. So that's an immediate jack up on those prices. Futures tumble, so futures stock futures that is tumble as Trump tariffs stoke trade war risks are all the same and hitting globally. Actually, Asian stocks actually holding. Remember, Chinese stocks in here have been on Lunar New Year all this last week in here and coming back and actually unchanged the Hang Seng going into the day. And actually China stocks actually rallying. Some China tech stocks in here rallying through because of DeepSeek in here. So some positives coming through for China. But if we look at Nikkei's down 2.6%. In here overnight. European exchange is also getting hit because of fears around potential Trump tariffs going into the EU and the UK. 1.24% down on the FTSE. German DAX down 1.7%, and the French CAC 1.6% in here this morning. And US futures significantly hit. The Dow this morning down 1.3%. Dow futures, S&P over 1.5%. And the Nasdaq has been down 2%. It's down 1.8%. Quite interesting, I think, here on the Fed Watch tool. If we take a look, so this was higher than this. So this is actually, I think, come down a little bit in here. So maybe a 15% because of the tariffs, maybe threat for the Fed to make an earlier rate cut, but still really pretty much not pricing in a rate cut for March. If we go to May in here now, 64% chance still unchanged. So less chance really as we go further out of rate cuts now. Still come June now, only a 39% chance that we don't get a rate cut even by June. And if we go out to the end of the year, look at here. So now the more chance of only one rate cut going into the year potentially. So if we had these 33, 40, 47, 48% in here, 48% chance that we only get one rate cut by the end of the year now because of concerns now these tariffs have been put on, that they're kind of maybe higher, more aggressive than we kind of maybe hoped for. And so the market now pricing in potential for only one rate cut. So that's a far more hawkish tone. Maybe the Fed are going to have to trade a more hawkish tone if inflationary pressures from the Trump tariff resurface. So potentially seeing an uptick in the inflation coming through. Yields in here are pushing lower, coming down to a really important level in here, but it's not going to save stocks in here in the short term. The 4.485 level is important. We've been down to here twice here, and you can see a potential head and shoulders topping yield. So it's a head and shoulders bottom in price in here. So potentially pointing to lower yields if we do break significantly through 4.85% on the 10-year, but that's not going to help. And you can see in here still this on the 10-year here. We can see kind of the same kind of inverse head and shoulders pattern in here. The market, really needs to stay above 109 like 16 kind of a 109.17 above there on the 10-year note would signal inverse head and shoulders on price, or confirm that. We've already kind of almost got the trigger on that inverse head and shoulders, but that would confirm it through 109.17 and open risk to the upside. So that would be open up lower yields as we looked at on the chart here, and that should help stock indices. However, at the moment, we were kind of a little bit concerned. There was even the hints of the Trump tariffs in here, knew they were going on this weekend. Back on Friday, we saw a sell-off on the S&P and the Nasdaq on Friday because of concerns about the tariffs. But obviously, we're a lot lower now. So, we were staying cautiously bullish before this morning's price action. Given the price action, initial knee-jerk reaction was to be more bearish because we got the gaps lower, and we'll look at them now. In here. So we look at the big gap on the Nasdaq, gaps down and then plunging. But look at this intraday price action, a significant rebound already intraday. We held above the low here and here, these lows. So we've got all these lows here. And if we can hold in, right, I do think there's a risk we go and take a look at closing the gap. So we've already had a significant intraday turnaround. So I think what's going to be really critical in here is going to be the cash market open. Then we get the PMI data as well. But I think the cash market open is going to be critical. If we can start pushing back into this gap, we could actually end up closing this gap, and it could be a net positive. So the market has kind of already been anticipating the tariffs, right? It's probably got a little bit of ahead of itself more recently overall. Remember, the S&P has nearly been back to last week. We're almost back to the all-time highs again, sort of thing. So not far off the all-time highs back on Friday. And although we had a negative close on Friday, and then we've gapped lower, this big gap lower, just punctured through this is the DeepSeek low. So we just cut below that DeepSeek low, but again, not as good a rebound and not a solid rebound here on the S&P, but the rebounds we're seeing at the moment, if on the cash market where it opens, we go into these gaps, we could easily see this being looked at a longer term buying opportunity by investors and thinking, well, we knew the tariffs are coming. The tariffs are going to happen anyway. They've happened they're out the way, done for now. Okay, we know they're coming probably on the Eurozone as well. And it's like, okay, if that's what it is at the moment, we're going to accept that. We're kind of built in a lot of that. And even though it's gapped down, I would not be surprised to see us trying to claw back into this gap. Now, if it undercuts the lows, if it undercuts the low we've already made today on the NASDAQ or the S&P, we go and undercut these lows, then I think it's having a go at these lows here on the NASDAQ, and if it undercuts the low here on the S&P, then it could be back down to this low. Not today. I mean, this low is not too far away, but potentially over the next few days, we could be having a look at this low and this low over here, right? But for now, I think the risk is that we push back in. And what are the critical levels to watch? Well, I think I put on these retracements, these Fibonacci retracements, are just from Friday's high down to the lows this morning. Okay, so on both the S&P, the Nasdaq, and you see in here we're already at around the 23.6% on the S&P, and if we jump to the Nasdaq, it's the same kind of thing. We're above the 23.6. If we can get through the 38.2, so on the Nasdaq, 38.2 comes in around 21,330. Okay, then I think it can easily open up back to the 50% level, okay, which is 21,450, okay, 455. So I think those are the kind of levels we're going to look. And then after that, it's going to look to like close the gap. Similar sort of story on the ES, okay, needs to get above the 382. The 382 is coming on at 6,016, and then that would quickly open up the 50% at 6042. So I think those are the levels to look to the upside in here. If it takes out the lows, then it could be notably lower. But for me, I think we're already down, as I said, like, we're down notably lower in here this morning. 2% down would be already on the Nasdaq at the moment, and we were obviously deeper down previously in here. So I think the market's turned around. It's had a big setback already, and it's already turned around and rebound. And I think we could actually see the market try and have a look at filling those gaps. Now, I think the price action on in the first 30 minutes after the cash market open is going to be critical. So watch for how we go after the cash market open, and I think that's going to dictate. Could be a very, very, very choppy. Be careful when the cash market open. Could be even choppier than usual. Okay, but then if we get any kind of bullishness coming through, I think it could open up to closing these gaps even today. All right, guys, I'm going to leave it there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar. I'll be myself or Duncan. Maybe Duncan will be on tomorrow, but one of us will be back with a Bull versus Bear webinar tomorrow.